Merry Christmas. I just got finviz yesterday. It was, I think, $300 for 12 months. So I wanted to see, maybe I'll find some new stuff to talk about in my videos that finviz offers. I like it so far. I created my portfolio so I can easily track my stocks. And I know a lot of people use finviz, so it's probably has a lot of features that I'm not aware about. So if you use finviz for something in particular, let me know, because I'm kind of just learning all the features. I did a video today on Copart, and I used finviz in the video instead of Yahoo Finance. But I'm going to try to do Amazon gift cards. I give away Amazon gift cards each video, so just say something so I know you're here, so I can put you on the list. But you have to claim the gift card. If you don't watch the video until the end, or until I do the giveaway and you don't know you won, after a day or two, if you don't claim it, you don't get it, because I can't keep track of people who won months ago. It's too confusing. So try to watch the video so you see if you won. So yeah, it's just leave a comment, say anything you want, just so I can see who's here, so I can keep track of so I can do the raffle. So let me know what stocks you guys are thinking in the finviz. We can look up anything. I was talking about AGRX as a possible investment, a risky investment, that is. But yeah, it's cool. You see finviz has the price chart like every website, but there's this E, a green E. That means they beat earnings. They reported negative 147. The estimate was negative 184. So they did beat earnings by 20%. Same thing in this quarter. They beat earnings. They missed earnings this quarter, and they beat earnings. And it shows stock splits also. And then the next part is a little more high level information. So the market cap, employees, only 22 employees. Forward PE 2.5, price to sales of 0.25. So that's kind of like they're priced as if they're going to go bankrupt. Usually, if a company is going to go bankrupt, right before they file, they have a really, really low price to sales ratio, because the stock price is so low at that point. And the revenue happened in the past. When you look at any of these ratios, you're looking at past information, because you don't know the future. So if the revenue in the past was like $10 million, that number is fixed until they report the next quarterly earnings. So as the stock price comes down, I'll show you what I mean. So let's say the revenue is, let's just say revenue is 1 million, which is a trailing 12 months. Say they reported recently, in the last 4 quarters, you sum up the revenue, it's $1 million. And the market cap is, let's just say it's $1 million. Keep it easy. So the price of sales is market cap over revenue. So it's 1. It's a flat 1. Now the revenue, it won't change for another 3 months. And and then this gets updated. But so over the next 3 months, the only thing that's going to change the price sales ratio is the market cap, which changes all the time. Every trading day, it's constantly changing. So if people think the company is going to go bankrupt, they're going to sell their stock off, and they're going to push the price lower and lower. So if people keep selling their stock, the market cap, say, goes from a million to 100,000. Now look at the price of sales, 0.1, which looks extremely attractive, because what they say when they look at these ratios, the lower the better. So a price of sales of 3 is better than 4. A price of sales of 4 is better than 5. So the lower the better. So 0.1 must be amazing. But what if let's just say they had a 10 million market cap and the price sales was 10, $1 million of revenue. What if next quarter they have an amazing quarter and they up their trailing 12-month revenue from 1 million to 2 million? Now it went from 10 to 5. So it looks more attractive because their revenue went up. Same thing, if the revenue goes down, so does the price of sales. Let me put so it's market cap over revenue. So that's why right before the company goes bankrupt, people just sell the stock and the market cap goes down and down and down, and then the price of sales looks amazing, 0.05. And the reason it looks so good is because everybody's selling the stock and the market cap goes down to like closer and closer to 0. But leave a comment, because I can't do the raffle without these comments, so I know who's here. So yeah, so I mean, I'm definitely not pumping the stock. I haven't bought it yet. I'm just really thinking, can this be a 50 bagger, 100 bagger? Maybe it's wishful thinking. So there's not much analyst information. The last one was 2021, and they had a rated outperform at $8 a share, and that's before the stock split. They did 2 reverse stock splits. And the nice thing about finviz, at the very bottom of each ticker, it gives you financials going back several years. This goes back to 2016 to 2022, then a trailing 12 months. So you can see they were pre-revenue up to 2020. Savo, finally somebody commented. Yeah, people comment. How's it going? Merry Christmas. So the revenue looks great. It's really, really strong growth. 750,000 to 4 million to 11 million to 20 million in the trailing 12 months, which is 4 times their market cap. That's why the price sales is 0.25, because it's 4 times the market cap. And the price sales is market cap over revenue. And your market cap's down here, it's 5 million. So 5 million over 20 million is what, 0.2. It should be 0.2 the price sales. Where is price sales? Okay. It says 0.25. It should be 0.2, I think. Maybe the 0.25 is using the 2022 revenue. But yeah, but it's pretty cool. Like, it gives you the visual of the revenue by year. and all the gross profit. They have positive gross profit. So from the 20 million revenue, they are profitable. Gross profit, that is. Of course, they have a lot of expenses. Like their big expenses, SG&A, selling general administrative expenses, 45 million. So they obviously have negative net income. They would need like 100 million. Hey, Chris, what's up? Happy holidays. And somebody said, commented, what's the catch about this company? Well, the catch is there's a decent chance they're going to go bankrupt. They're not really bringing in a lot of revenue at this point. They have negative free cash flow. They don't have that much debt, but they have debt. And when you have negative cash flow, you're going to need to take on more debt to pay that debt off. I'm talking about this AGRX, Agile Therapeutics. It looks really interesting. They've done 2 reverse stock splits. So when you adjust for splits, they were trading at $12,000 initially. So if you put $12,000 into the stock in 2014, you'd have, I think, $2 today. Look at all these red bars. See, when you see a red bar, that means, let me zoom in a little more on that. When you see red bars, that means the sell orders are higher than the buy orders, and the stock goes down, you see? And when you see green bars, you can't really see too much. Right here, a small green bar. Then the stock goes up a little. There's a couple of green bars down here. This thing keeps coming up, and the stock goes up. When there's green bars, the buy orders are higher than the sell orders, and the stock price goes up. That's how the market works, supply and demand. But I don't think this is a long-term hold. I'm just thinking if they hit their revenue target, which it looks like they will, because they initially said they need their forecast is 25 million for 2023, and they're already at 20 million revenue through 3 quarters. So they just need another 5 million in the 4th quarter, in this last quarter. And if they do that, and they also mentioned they're gonna have positive operating cash flow in the 1st quarter of 2024. If they do that, I could see the stock shooting way up from like 2 to like 20 or something like that. And I mean, I wouldn't hold it. If it did shoot up, I would sell it, because I don't trust the long-term viability. But at a short-term play, it seems like there's a decent chance. But let me know, is there any other? I'm trying to learn more about swing trading and those short-term plays. You have to really take advantage of price movements. Like, for instance, if you see a stock that has, over like the past 5 years, lots of ups and downs, and if they consistently do that, maybe buy at the next down and ride it up, but you have to get out before it drops. I bought 2 courses from Udemy yesterday. I bought like a day trading course, like day trading penny stocks, swing trading. Bulldog, what's up? Because I'm like, I understand how the market works, but maybe I could learn something more, especially learn about how to identify short-term price movements, which, I mean, I kind of have an idea, but I don't really know for sure. So why not? Maybe I could learn something new. So I bought these courses. They were like $10, $15, and I couldn't even finish it. I had to ask for my money back. I don't mind the fluff. Like some of these guys just keep talking and talking about like these theoretical situations and talking about how they make millions. I don't mind that. It's fine. But I can't listen to someone who doesn't even some of the things they said were incorrect. Like they were trying to state things about certain companies and they were just making mistakes. So I'm like, and I'm sure nobody else knows about they're making mistakes because they don't really understand the market that well. So I couldn't even finish the course. I just can't respect someone who makes these basic mistakes. Well, one of them was like trying to explain penny stocks, and like a really common mistake that people do with penny stocks is, well, I guess I'll bring it up on here. They always talk about like these big companies, and people always, I can't even see it on this chart. Let me go to Yahoo Finance. Make it so hard to see. Like if you look at Microsoft, I mean, it appears it was trading at like 10 cents, 15 cents, even like $2 after a few years. He even said that. He goes, at one point, Microsoft was a penny stock. But the chances of you finding a Microsoft penny stock and investing in them is like winning the lotto. But it's such an amateur mistake. Microsoft was never a penny stock. It IPO'd for like whatever, $15, $20. The only reason it appears to be a penny stock is because of all the stock splits. Every time they do a split, it gets adjusted down, all the previous prices. So it's such an amateur thing that if you don't know that, and I'm definitely not, I don't care if people ask me, people make that mistake on my channel all the time, and I'll never like criticize them. If somebody on the last live stream said, well, Amazon was a penny stock, and then I show them why it wasn't a penny stock. But people make mistakes, so they don't understand. But if someone's going to try to teach me and take in other people's money, it's absurd. So yeah, they also said that on the guy I was listening to the video. He said most penny stocks are scams. I don't know about that. I'm sure some are scam type companies, but he said pretty much 100% of the penny stocks are just scams, people trying to make money off investors. But you have to understand this. I'm pretty sure most companies, even penny stocks, are legit companies, because if you have a company and it's trading even OTC, it's still much, much larger than the average mom and pop business in your town. The average business, like the average like laundromat or grocery store or the average store, mom and pop store in your town, not like a Target or Starbucks, just a regular store. It's generally, they're not worth that much. Maybe like 100,000, 200,000, possibly $1 million max, the value of the company. But if you're even a penny stock, the company's probably worth 10, 20 million, possibly 50, 100 million. Yeah, exactly. The Russell 2000. As far as investing in these companies, I don't think they're great investments, but I don't think they're scam companies. I think they're legit companies just not the best investment. Because if they were a really good investment, they might be traded on a major exchange, or they wouldn't even need the capital. If you're like a healthy company generating enough cash to live your life, you probably don't need to go raise money in the capital markets. Charles Odin. Yeah, leave a comment. And I'm going to try to do these. I'm going to try to do these giveaways to maybe encourage more people to watch. Wow, that's a pretty dark name, Gilgo Beach Slayer. I think Zim is finally getting to a good entry point. It's a very risky industry. You have to realize when you invest in like the shipping industry, or you invest in an industry like a gold company or an oil company, it's so dependent on the commodity. Like most businesses are not extremely dependent on one thing. Every company is dependent on something. If you have what's a good example of a business? If you own a gym in your town, you're dependent on a lot of things, I guess. Like you're dependent on having enough people to employ, and then if not many people are interested in working at your business, you might have to start paying more money, or you may be dependent on, I don't know, a certain company to buy your products from. So everybody's dependent on something. But if you're like an oil company or a gold company, you're just totally dependent on the price of that commodity. Like if the price of oil is like $60, that's kind of like the break-even point, $50, $60 just for these companies to stay in business. But if oil goes down to like $30, $40 a barrel, these oil companies just can't make money. It costs so much more just for them to operate their business. Once oil gets up to like 80, 90, 100, then they're making tons of money. So same thing with shipping. It's just highly dependent on the price of the shipping rates. It's really dependent on shipping rates, and you can't control that. You can't. It's not like if you have a gym in your town, you can control prices to a certain point. Like you could charge people a certain amount of money. I mean, obviously you can't go overboard, because then people may drive an extra 15 minutes to the next town. There's a gym there. But with shipping, there's just, you can't charge more than the market, because there's no reason for someone to use your service. So it's like a commodity. If you are lucky enough to have entered some of these cyclical stocks at deeply depressed values, then it can be just long stocked by. So I'm just trying to like play the lotto and look for these kind of penny stocks, because I'm not going to put a ton of money into it. Like $1,000 is my comfort point to put into these stocks. But if I could if I could start learning some patterns, and I'm much more willing to put in a lot more money, 10, 20,000. But I want to see if I could figure some things out. But it's so hard to time things. Yeah, maybe I should look into options again. I used to play options a lot. Zim was making so much money for a while, right? They were like making a ton of money. They made so much money, they had to give back, like they were giving like a 50% dividend. 8. You lost 300K? Are you serious? That's a lot of money. I mean, how do you lose 100K on options? You were doing uncovered calls? You should, yeah, yeah, don't do uncovered calls. Yeah, PBR is a great stock. Yeah, shorting is fine, but you have to own the stock. Protect yourself. It's that's crazy. You must have a lot of money, because that could be painful for anybody to, unless you have 10 plus million, 300K will bankrupt most people, and the people it doesn't bankrupt, it would hurt them severely. My wife would divorce me if I lost 300K. I probably wouldn't tell her. I'd be too scared. So the rule is it has to change numbers. 4. Well, you probably learned a lot. I lost like 60K once on UCO. The triple leveraged oil stock. There's UCO and USO. I'll show you the chart in a little bit. 6. 8. So Odin, just make sure you email me. Email me at this email address, and I'll send you a $20 Amazon gift card. I'll be right back. It's outside my comfort zone. James. When I say risk-free, I mean you can. The reason the market goes up, it has to go up over time. And I don't know what 2024 is going to be, but I can promise you, with all the crazy inflation, the market, I think, will go up in 2024. Because remember, like even 6-7 years ago, how much cheaper things were than today? Anything, like if you go to a car wash, you buy food, you go on vacation, it's just so much more expensive now. And how do you hedge against higher prices and inflation? You buy an asset like a stock, or you buy real estate. Just don't keep money in the bank. That's what inflation is. It's a tax on your savings. So just don't put it in your bank. Just use it. Put in a money market fund or something, because it just if you leave your money in the bank long enough, eventually it'll be worth nothing. If you have $100,000 in the bank, imagine how much $100,000 could have bought in the year 1900. But if you just kept it in the bank and it's the year 2000, like your grandfather had it, and now it's 120,000 because you get hardly any interest. you could buy nearly nothing. You could retire. You could be 40 and retire with 100K in 1900. In 2000, you get nothing. Inflation has come down a lot. It was getting crazy. It has come down, but people have to adjust. That's why when there's a lot of inflation, like there was, companies like Costco and Walmart, they didn't do that well because they were getting squeezed because they had to stop buying products for a lot more money. And there's an adjustment period. They will charge more, but it takes a few months to adjust things and then get back to where your margin should be. So these kind of companies with slim margins, like 20%, 10%, 5% margins, they totally get squeezed and they don't make money. The high end stores, the really like the Williams Sonomas and the really high end stores that sold really high end expensive products, they did great in the inflationary periods because their margins were already big, and now people were making more money. Although the bad thing about inflation is, everything gets more expensive. Like food gets more expensive, gas gets more expensive, but your salary doesn't go up that much relative to how much more. Once again, it's a lagging period. Salaries lag behind other things. Unless you're lucky enough to get a new job or you do something really important. The amount of baby boomers pulling from index funds and retirement advice adding to them as workers is a negative drag on the market. Yeah, it's possible, but I think overall, there's always a ton of money flowing through the U.S. economy. There's so much demand, so it's just a growing market, and it's never really detracting. That's why it's well run. The U.S. government does a good job, because running a country is like running a business. Venezuela is doing a bad job right now. South Africa is doing a bad job. What's it called? Turkey, crazy inflation. You have to kind of manage things well. In the U.S., they generally manage it where inflation averages 3% a year, which is what it should. But later, yeah. So finviz, I signed up for finviz yesterday, and I haven't really used too many features yet. What's the charts? Oh, that's just groups. Okay, this is just industry specific portfolios. Oh yeah, I just put things I'm tracking or I own. Do you guys use screeners? USD debt clock showing. So I started looking into more these penny stocks to see what's a good investment. That's how I found this company, the therapeutical company I was talking about. So I'm really been focusing on small cap. I mean, I guess I could do micro cap, but we'll try micro cap. And then yeah, I don't like to do funds, especially. I think try to stick to US because there's some great companies outside the US. China has some amazing companies, but they kind of have a ceiling in terms of how high they can go because of the country risk. So unfortunately, like Petrobras, great company, great Brazilian oil company. They control like 3/4 of the oil in Brazil, but the stock price doesn't move because of the country risk. Nike, yeah, I heard that. Let's look at Nike because somebody mentioned that to me the other day. So if you want to play it safe and not lose a ton of money, really, really good brand names, popular companies that are struggling, that have something happen, like what happened with Nike. I mean, when you pick these penny stocks, not many people know about it, so it could take a long time for people to even invest in them because there's not much knowledge, and stocks are supply and demand driven. So if not many people know about the company, then people don't buy it. Like that's why like Tesla was doing so great, because Elon Musk, he got the name out, and everybody kept buying Tesla, even though some people didn't even know what a stock was. Or so yeah, so they did beat earnings. What was the catalyst for the big drop? The reasons to buy. Like if a good company has like a lawsuit going against it, or something extreme happens where it tanks the stock, that's a good time to buy it. What was I thinking with it? Nike reported earnings growth. Oh, they lowered their guidance. Okay. So that's why it crashed, from lower guidance. That's generally what happens when a company reports earnings. Even if they beat earnings, if they report lower guidance, because that's what investing is about, looking towards the future, not really the past. So even if they have amazing earnings, the stock could still crash if they report weak guidance. Because when a company reports weak guidance, people think this is the end. You know how like when you buy a stock and it goes up and you're like, oh my God, I'm gonna be rich. This stock can never go down. It's the best company in the world. And then when it starts going down week after week, you just think it's gonna keep going down. It'll never go up. So people are very extreme in their thinking. So when they see something, bad news, they kind of compound the bad news. But you got to take advantage of it. But the problem is, when you do buy it, if you do buy it at these levels, 110, and it goes down to 80 or 70 or 60, most people will sell. They just can't handle it. So when do you buy? That's the hard part. I remember I bought Netflix. It dropped 30%. I bought Netflix. Then it dropped another 30%. Now I'm up 25% in my Netflix because I knew it was a good buy, but it's just painful to watch. Yeah, that is true. I don't celebrate either, but I mean, when I was a kid, it was Hanukkah, I guess. But I don't care. A lot of people say Merry Christmas. Let me add some names. So yeah, please, you don't have to donate money, but please try to watch the videos and subscribe and like them, so I could do more of these kind of giveaways. And I don't mind giving away more, like hundreds of dollars or thousands of dollars. Thank you. Wow, they're very generous. I'm always amazed when somebody donates, like Stone Co. Bum Spanker. Everybody say thanks to Bum Spanker. If anybody ever donates, can everybody just say, way to go, nice job? Because it's really nice of someone generous. SP Narwhal. The Humanist. The Human Fund. Dendim. Yeah, leave a comment so I can add you to the list of. Leave a comment if I Dex has been around a while. I've seen him. Business with Redbeard. Did you see the video today on what's it called? The car company. It was I can't. It's funny when a camera's in your face, you don't think as clearly. Copart, really overvalued. It's kind of like a Tesla, you know. People just keep buying more and more. Odin, thank you. Wow, everybody's so generous. Thank you. That's so nice. Wait, what? Oh, Stoneco. Yeah, Stoneco. Wait, Stoneco was a SPAC, no? What do you guys think of Stoneco? Stoneco 5.6. Wasn't it one of those SPACs that actually did well? $5.618. New. I'm up 100% on new. I bought new in my. I have an IRA account that had like 30,000 in there. It had 50 at one point, and I bought I put it all into new bank. Now the 30 is up to 60. So. Nubank is a fintech Brazilian company, a Brazilian fintech. What happened? Where'd it go? $964.40. It doesn't kind of fit. Nubank doesn't fit into my normal investing style, which is a little different. And usually when I change my investing style, I generally don't make money. But in that case, it actually worked out. I'm actually up. Like I bought Petco. I'm down 30% of Petco. That doesn't fit into my investing style. I bought Epsilera, a lot of Epsilera. That doesn't fit into my investing style. So 1 for 3, I guess, is okay. The Epsilera, I really like it. I'm not sure why, but hopefully it rebounds. Is anybody else in Epsilera? I'm 12, 13, 14 and a half. This is reais, right? Brazil. It's Brazilian. It's Brazil. Is that the currency? Yeah, Brazil. Okay. So 0.2. Anybody invest in StoneCo? It wasn't a SPAC. I thought it was a SPAC. Am I thinking of something else? 11.8. Oh, that's actually pretty close to where it's trading at. SoFi, no, wait. SoFi wasn't a SPAC. I don't think so. PaySafe is a SPAC, yeah. PaySafe's definitely a SPAC. One way to figure it out is no, it wasn't a SPAC, StoneCo. And I don't think SoFi was a SPAC either. Oh, it was? No, I don't think so. Maybe they invested in SPACs. Is SoFi a SPAC? SoFi's ability to meet this projections when announcing its SPAC merger makes it stand out among. Oh. So how come? Did it split? Because that's so weird. Because it started out at $19. SPACs always start at $10. I'm so confused because all SPACs start at $10. So why was it 20? Unless they did a stock split. Stock splits. What's wrong with this? I don't know. I guess so. It doesn't make sense. Why? Who acquired SoFi? SoFi SPAC. Social Capital. Complete that previously announced transaction to take SoFi public. I guess so. So weird. Yeah, I mean, definitely there are some stocks that are overbought, but let's see. So StoneCo looks like it's trading at the right price. I mean, they do have this big negative. If you strip out this negative, because they're probably not going to have negative free cash flow since they are positive the past 3 years. So let's just remove that negative and see what it is. It's obviously going to be a lot higher. Now it's trading where it should be. StoneCo. StoneCo. Why did Berkshire Hathaway invest in StoneCo? Well, that's a good sign. If Warren Buffett invests in them, pays attention. So there's no shit conglomerate. Not that sizable investment in Brazilian fintech StoneCo. So there you go. Dendim, thank you. Appreciate it. What is a fair price for Brazil miner Vale if iron ore stays at 130 fall of 2024? It's another stock that's pushed down because of the country risk. I don't like Yahoo's new site. It's a little hard to see. If you add iron ore, oh, Khaled, that's why you're so generous. Thank you. Is Vale, is it copper biggest commodity? Oh, it is iron ore and nickel. Ticker for iron ore. How do you track iron ore? I thought there was a ticker to track iron ore. What's CLF? Oh, that's just a company. Oil and natural resources, all state-run in Brazil. Yeah, a lot of these companies are owned partially by the government. Like Vale, is that owned by the government? No. Yeah, but some of these companies outside the U.S. are like partially owned. Because I just did a video on Sibanye. On Sibanye Stillwater. They're South African, but they're 20%, 18% is owned by the South African government. So they kind of pull the strings on these companies. But Vale is a great company. Like, that's when you sell a commodity, you're in, because it's so needed, especially these days. $68 billion market cap. It's a big company. And financials. I wonder why this doesn't work anymore. Oh, okay, that worked. Damn it. Actually, I think can't remember. Is this Vale? I know a lot of people on the channel made good money on Vale when it was like in like $10-11. I was really trying to pump it up because it was way undervalued. So that's interesting. This says, yeah, Vale reports their financials in US dollars. Okay, so let me. Okay. It could get confusing. Sometimes websites are wrong. They say the wrong currency. But anyways, well, let's get the correct whack for Vale. The problem for commodity stocks is that it could deep even further if we get really into deep recession. %. You see, that's a high whack. See, that's the problem. JB, thank you. What's the most beaten down and hated market sector? That's right. Everything seems loved right now. It seems like a lot of these pharmaceutical stocks, well, at least Pfizer I know of and Johnson & Johnson are down a lot the past 2 years, like 20%. And I think Pfizer's down like 30%, while everything is going up. It seems like Pfizer could be a good investment. So you could see if this was a U.S. company, it should be worth $30 roughly. But it's a Brazilian company, so it gets this country risk premium, as they put it. So it's a higher whack, and it kind of has more of a ceiling to the price. So I still think it's a good company because they're just one of the biggest players in like iron ore, nickel, a lot of other commodities as well. CVS, yeah, that's a good how do we look at the industry? So is there a way to look at industries on finviz? Groups? This is 1 day, 1 week. Yeah, I want. So here you go. The 1 year performance. Utilities are getting crushed. Okay, 1 year, utilities are down 9%. Consumer defensive is also down. Everything else is up. Healthcare is up 2%. I thought that would be down because maybe certain healthcare companies, but I know, let me look at, I like the old, back to classic Yahoo Finance. Okay. I'm gonna be using classic because I don't like how they don't, let's just do 2 years. So this is Johnson & Johnson. Pfizer. Wow, Pfizer's down 52% in 2 years. Who else is there? Who are some of the other I think these giant pharmaceutical. Oh, I guess it's just Pfizer and Johnson & Johnson. Merck is up 42%. Bob is a killer. So I guess it's these two. I guess in this industry, drug manufacturer general. Eli Lilly, that's another one. Yes. I guess I picked the wrong pharmaceutical company to invest in. Screener. Drug manufacturer general. I don't even know. I get filtered by. How do I pick the industry? Oh, here it is. Drug manufacturer general. This is okay. Here's a change. But what is this change for? Is that the 52-week change? Or is that just the last trading day? Eli Lilly's the big one. AbbVie. So I guess utilities, according to okay, here we go. We could do a chart. So Eli Lilly's up a lot. Johnson & Johnson is kind of flat. AbbVie is flat. Merck, I thought earlier, oh, this is the past year. AstraZeneca is down. Novartis is up a lot. Pfizer is yeah, I don't know these so utilities. Sheesh, which utility though? So is anybody this agile therapeutics? Is anybody with me? Agile therapy update on actions being taken to strengthen the Affordable Cares Act. No cost contract. Post-growth third quarter reiterates confidence. I mean, I don't know. Maybe I'm crazy. I just have a feeling it's going to like 50x. Once they hit the target, they need 25 million. They're pretty close. They're at like 20 million. The commercial stage women's health posted 122% increase in third quarter revenue year over year. The revenue is growing dramatically. I mean, when a company is losing money, then you look at revenue because you can't look at like earnings because it's negative until they become profitable. Most companies are losing money in the beginning years. Who's to say this past month the rate cuts are not priced in already? Solar scares me too much. Hated, but also scammy. Did I do the? Okay. Did I miss anybody on this thing? I guess I got everybody. Okay. So let's do another raffle. 10. 9. 'How do you say your name? Is it J silent, like Prawal or Projwal? Projwal? I don't like saying names wrong, but I'm not sure how to say it. 2. 5. 8. Imagine 8 wins again. How does the raffle work? You have to get picked twice. 7. You're on here. 21. That number picker rigged like the election. 22. I would guess almost never. 1. So it's pretty diversified, the raffle. 19. A lot of numbers, a lot of names. 11. 21. Neil Weston. Okay, so make sure you email me so I can give you the prize. Neil Weston. It's not part of the parent company. Yeah, so this company, the only drug that they sell is Twirla. It's FDA approved. It's a patch. It's a birth control patch for women. So they put a patch on so they don't have to get pregnant. And the good thing about a patch is that you won't forget it. As long as you put the patch on and leave it on. The problem with pills, sometimes women forget to take the pills. At least that's what they say in the comments. I mean, it is only one drug, but you have to look at it as, the revenue versus the size of the company and those things. In terms of being a $1 billion company, they're not even close, but in terms of possibly the stock rising or being profitable next year, it looks possible. Your revenue of 6.7 million in the latest quarter, up from 3 million. And their market cap is only 2 million, right? No, 5 million. 5 million, I think. But I mean, they sell. You could Google it. They sell the drug. It's out there. People commented on it. Women commented. For about now, Agile has been recalibrating the business, focusing on building a scalable commercial platform. I know they're focusing on 5 states to do like marketing. But the stock is down 99.9% because they had to keep doing reverse stock splits. They don't have much debt, which is nice. They do have a little debt. But the shares outstanding, they used to have a lot more shares, 29 million. Because of reverse stock splits, it's gone down. This is not right. I don't know why It has 0 here. Maybe they have no debt. It's risky. It's risky. It's an acquisition target. So I think it could be a good acquisition for another company, especially if they become profitable next year, like they say they will. Only 2.5 million shares outstanding. So when you invest in these companies with like 10 billion shares, your share is like nothing. But when they have so few shares, so your shares mean a lot more. You own more of the company. But yeah, we'll have to wait and see on this one. So has anybody ever used the back testing? I haven't used this yet. There's the crypto screen. Look at Bitcoin. It's up to 44,000. I did buy 100 of Bitcoin. I'm up 30% on that $100. Litecoin, Ethereum. They don't have Dogecoin. What is Doge at? Is that still around 6 or 7 cents? They don't list Doge. Wow, it's 9.5 cents. It's up. I remember it was 6 cents for a while, for like several months. It's still a lot lower. It was like 60 cents, I think, right at its peak. Maybe 30 cents. What garbage investments, these crypto maps. I guess that's what they're known for, the maps. So you can look at it's pretty neat though. Let's look at a PE map. Wow, everything is pretty overvalued, at least according to PE. Look at Berkshire. They're undervalued to a 10 PE. The only reason I bought Bitcoin was because there's this website that if you pay in Bitcoin, you don't have to pay any fees. And the fees are really high. The credit card fees and the processing fees. So that's the only reason I buy it, to pay for things on that site. So JPM, Wells Fargo, Exxon, low PE. It seems like the low PEs don't really go up. You would think the low PEs would go up and the high PEs would go down, but it always seems like to be the opposite. Broadcom, 34. Let's see the dividend yield. Chevron and Exxon, if you want a nice dividend. Who pays? Johnson & Johnson, only 3%. Pfizer is 6% because the stock has come down so much. The yield is going up. Intel, 1.5%. Oracle. Let's see the float short. What is shorted the most? Well, these aren't really shorted. Palo Alto, that's almost 6% shorted. Carnival. It's interesting, these charts. Hey, let's look at this is the S&P 500 screen, right? Yeah, S&P 500. So what's down the most? Oh, next era. That's down 29%. Pfizer's, I guess, the most, 45%. This would have been the right screen to look at to figure out how much the pharmaceutical stocks are down. I wish they would give a longer than 1 year, like a 2 and 5 year. What's EL? Oh, Estee Lauder. That's down 41%. General Mills, 24%. Paycom down 34%. Look at all the software companies. Look how much they're up. All of them are like up a ton, except Paycom. It's down 34%. Everything's up, like some are up over 100. Uber 143%. Utilities are down the most. Most of them are down. So if you want a beaten up stock, next era is beaten up. Dominion is down 22%. These are really big utility companies. I didn't even think of utilities. I was thinking of healthcare is beaten up the most, but it looks like utilities is. Banks are also struggling. The regional banks. But the bigger banks are doing okay. ACGL. It's an interesting screen, right? Relative volume, PE, forward PE. Insiders. Domo Software. Golden Entertainment. Let's see if there's any big Wheeler Real Estate. A lot of shares. Listen. Do you guys look at the insider trading when you buy stocks? I don't really look at it too much, but Berkshire Hathaway, lots of buying. And Occidental Petroleum. Let's see, selling. Ionis Pharmaceuticals, lots of selling. CrowdStrike. I took a beating on CrowdStrike. The president, the chief accounting officer, the CFO, CSO, they're all selling. It doesn't make you feel too comfortable with when somebody who has so much money sells, but maybe they need to get out of debt. Maybe they need to to buy a new yacht. I mean, who knows the reason? They may not think the stock's going to go down. They just may need money. So it's not, well, they may have gotten fired for the company or quit the company and they don't want to own the stock anymore. Ryokan Real Estate, Allied. I mean, high interest rates. Well, I guess low interest rates have helped stocks more. High interest rates, I guess banks benefit from high interest rates because they charge on the loans and maybe the spread widens. But they also have to get money in order to fund the loan. So they have to pay interest to 5 minutes. Yeah. REITs, yeah, I don't own any REITs. They can be risky REITs, but there's some pretty stable ones out there. Okay, well, I have to go to the in-laws. It's very exciting. So, well, thanks for joining. Thanks for the donations. And please try to comment and watch the videos so I can keep doing more of these giveaways. See everybody soon. Probably I'll see you next year. I don't think I'll be doing any more live streams. I'm going to Mexico in a few days. So, Happy New Year. I'll see you around.